Welcome to Bookkeeping and Accounting for Real Estate Investing. This is the most requested and semi-most attended class, I guess. I was expecting it to be the least attended class tonight, but apparently not, given the weather. Upcoming classes, next week is Deal Analysis 301, which is multifamily analysis. I'm teaching that, apparently. And it will be how to analyze multifamily properties, along with some case study information based on 2 different properties that I own that are larger multifamily units. So that should be super interesting. You can kind of see what one looks like across kind of a 3+ year period of time, and another one, what it looks like across on a 1-year period of time. And James wants to know if my mic is on, which it is.
Better check now than at the end.
Yeah, well, we tell people you have to show up to get the course. So,
This is true.
You know, if you didn't show up, can't help you. And then the next 2 weeks, James is teaching real estate investing portfolio analysis. He has no idea what he's teaching there yet, based on the shaking of his head.
It may change.
And that is on June 20th, and I'm out of town. So we talked about moving this one up and then doing something here. Are you not teaching this class? Would you like to tell us what these 2 are about and what you plan to teach? Royce, mic runner, needs to get to James.
So I really don't know what real estate investing portfolio analysis. I probably had a good idea at the time, but I don't remember what it was. So I may switch those so that June 20th may be the 2 best investing strategies for our market right now, which I'll go over the 2 best strategies that are working right now in Northern Colorado, and I'll teach some stuff that we haven't taught before on those strategies, because some of them we've taught stuff on it before, so it'll be new. And then the other one, we may swap it out for...
We talked about doing the,
biggest mistakes.
Yeah,
or
like the bad things that happen.
Yeah, maybe we'll do like horror stories or something like that on June 27th. So that may be what's happening there.
Horror stories, but...
Well,
so
I have some horror stories.
Would you like to just decide what you're going to do?
Sort of like that, Cabin in the Woods horror stories. Pretty close.
Are you going to move this?
I will email everyone.
All
so
right,
if you're not
perfect.
receiving emails, you need to definitely reach out to me, because you should be receiving them.
Or just look at the NCRAG meetup site as well,
Yeah,
and that
yeah.
will also get updated. The week after that, I looked at the schedule when I put this up there, and I was like, oh, I guess I'm teaching asset protection again. So asset protection has 2 parts. Part 1 will be kind of the main area where we talk about what are the main asset protection strategies that you can implement based on lots of talks with attorneys and my own experience. Part 2 is the documents, which I believe is the following week on July 18th.
And there's no class on July 4th.
And there is no class on July 4th. Go watch some fireworks. Anything else you want to say about classes?
No, we're trying to add new classes we've never taught before, because we have like 110 classes recorded. And one of the things that occurred to me recently was some of the earlier on classes, the audio recording wasn't nearly as good because we weren't wearing microphones. And so we may actually rotate through those again, since we haven't taught them for a while either.
Yeah, cool. So we'll do introductions tonight, and we can start with James since he has the mic. Royce is going to be our designated mic runner tonight. So if you have a question, raise your hand. Royce will come around. But we'll go around the room. Just introduce yourself. And then the question of the night is, what do you use now for bookkeeping and accounting, and what is your least favorite thing about it? James.
I'm James Orr. My real estate experience is mostly single-family homes. I think at the peak I owned 26 single-family homes. I own fewer than that now. A lot of them, my current holdings right now are mostly in partnerships. And then I have, I'm in a partner in a bunch of larger multifamily, like 100 units. So I did creative real estate stuff, real estate brokerage, pretty much anything you can think of. And then what do I use for bookkeeping? I use Tammy. So Tammy does bookkeeping, and then the CPA does the rest of it. And so what is my least favorite thing about it? I guess my least favorite thing is occasionally she gets busy and complains that she doesn't have time to do it. So.
Wow. And you're not making it to the next anniversary, I guess.
My name's Deborah. We've got 2 properties now in the last year.
Awesome.
And I'm using QuickBooks. I do all the bookkeeping myself right now. It's becoming overwhelming. all the receipts for 2 different properties is kind of too much on top of everything else we do. So
Are they flips, or are they just buy and holds?
buy and hold.
3 months of each other, both of them within 3 months of each other. So we're fairly new at this, but we've been looking at real estate, getting into real estate for about a year now. So finally just made the jump.
Cool.
Hi, I'm Donna, and this is one of my favorite classes because I do accounting for a living, and so I'm always interested to see how other people teach it. I do use the spreadsheet that James is graciously shared on the website, and I also have a CPA that helps me with the 2 buy and holds that I have so far.
So that's Brian's spreadsheet. So I appreciate you saying it's from me, but it's from Brian through me.
But I got it from your website.
Yeah.
It's Brian's spreadsheet.
It is Brian's spreadsheet.
I was like, I didn't know you made a spreadsheet.
I didn't make a spreadsheet.
You just copy spreadsheets.
Hi, I'm Kim, and I'm kind of in their situation. I have two properties, pretty new, and except it's long distance, so we have a property manager too, and it's just gotten. I've started QuickBooks, and now it's just like such a mess. I don't even know what to do. So I'm here.
Perfect.
Hi, I'm Corey. For my real estate experience, I have 2 properties, a flip that's happening right now, and then a nomad hold that I'm doing. So, and then as for bookkeeping and accounting, I use Excel spreadsheets.
Hi, Calvin and Caitlin. We're pretty new to real estate investing, but we're just getting started with our first deal, so we have that going. We're just trying to plan a little ahead. So no bookkeeping software yet, but probably need it soon.
Awesome.
I'm Josh, buy and hold investor, and my bookkeeping consists of the reports my property manager sends me.
I'm Tammy, and I'm thinking of adopting Brian's spreadsheet.
Such a liar.
I'm thinking about it. Now that you're like, it's a great question.
I'm Mary, and my real estate experience is buying houses, but not doing anything with them other than living in them and selling them later. Bookkeeping, that's why I'm here.
Perfect.
I'm Royce Quintana. I have some buy and hold properties, lease options, a couple partnerships. As far as bookkeeping, I use QuickBooks. For all my real estate stuff, I actually just let a bookkeeper handle all of it, but have definitely considered bringing it back in-house because there's not much to do on buy and hold stuff, but got enough other bookkeeping to try to keep track of in other businesses. So my least favorite thing, honestly, is pulling down bank statements and that type of stuff monthly, and I'm hoping to put something like File This or one of those services in place so that it just auto-downloads it.
Nice.
I'm Nick. I'm in my 2nd year nomading. I've been using a spreadsheet that I got off of Bigger Pockets for accounting.
Get out. I'm just kidding.
I deserve that.
You just didn't know about the other spreadsheet.
Right.
I understand.
That's why I'm here. After today, I'll be using the new spreadsheet, hopefully.
Only if it's better. If it's not better, you should let me know. I'll be really disappointed in myself then.
I'm Curtis. I really don't have much real estate experience, but to help keep track of my expenses and whatnot, I use GNU Cash.
Austin and Michelle, we're just actually buying our 3rd place. So far we've just done Mint and Personal Capital on our own. However, we started watching some of you guys' online videos and utilizing your spreadsheet. Now we're looking at potentially lease options and how that's working. So if we do, now we're like, okay, we'll probably want a CPA because I would have no idea how to do recapture taxes and all that. So here to learn.
I'm Denise, Northern Colorado long-term buy and hold, a couple of lease options. For bookkeeping, I have a real basic Excel spreadsheet that I started years ago, and it's real basic. My CPA is trying to convince me to switch to QuickBooks, but my solution is to get my son Daniel to start keeping my books for me.
Daniel, things just got interesting, man. Whoa. Nice. What is the pass the mic thing?
Yeah, what's the pass
Introduce yourselves. Daniel, introduce yourself. You should have been like, I'm Daniel and I'm not keeping books for my mom.
I'm Munir and I buy and hold investments with Denise.
I'm Zinnian. I'm a beginner to all of this. So, but for my own home, I just use Excel.
My name's Chad. I own one property, and I'm just sitting on it for right now. As far as bookkeeping, I use a lot of different ones because I own a CPA firm, so I use several different bookkeeping stuff, like Sage, SAP, QuickBooks. For my own personal, I use Excel. I like making my own pivot tables and doing things like that. My least favorite thing is fixing other people's books.
No doubt. Do you have something?
Maybe.
Maybe.
I'll just point out something. So I was looking out into the audience, and there are a lot of nomads here tonight.
I know.
That's what I was just noticing. I'm like, whoa, that's
Yeah.
like a highly unusual. So it's a really heavy nomad night. So I don't know if you got anything extra for them, but.
Not yet.
Yeah, sorry.
He was talking to her. I was going there.
Oh, sorry.
Hi, I'm Allison. All of my real estate experience is secondhand by being the bookkeeper for my mom's real estate empire. And we use a combination of her own Salesforce system and Excel.
Nice. I see you like set me up with like several bookkeepers and CPAs.
It's who you attract. When you do the
Yeah.
asset protection class, you get like 10 attorneys in the room too.
I'm lucky to get one.
I know.
Because they're like, I'm not going to that. Everyone will ask me questions.
That's right.
Yeah, so thank you for all the CPAs that are coming. You guys can just stand up here and teach the rest of the class. For those of you that don't know me, I'm Brian Williams. I'm a long-term buy and hold investor in the northern Colorado area, ranging from kind of Fort Collins down to Longmont and over to Evans. Involved in partnerships, have done lease options, have done one fix and flip with James a long time ago. That wasn't supposed to be a fix and flip, but was. Yeah, no, I disagree. Man, this is really blue on your computer. Your computer is colorblind. So there's lots of options. I will say this is a different setup. I'm usually used to having this so I can see it, so I'll probably face this way more than normal tonight. There's lots of options for bookkeeping. Some of you have already taken the simplest one, Royce. Right? Hired a bookkeeper and he's got an accountant and they just handle everything. So there are several accountants and CPAs in the room. So speak to them after class if you want the super simple solution. It might cost more than you're willing to pay though. QuickBooks. How many of you, just by a show of hands, have ever used QuickBooks? How many of you have enjoyed that experience? That's exactly right.
Hey, Royce enjoyed it.
Yeah, two people enjoyed it. There were like 20 hands up and 2 remained up, right? So QuickBooks is double entry accounting. It's not complicated. It's just something to learn that's different. And QuickBooks, if you have a CPA that is qualified to set up your books for you, it can actually be super easy to enter all of your stuff. If you're trying to enter stuff from your settlement sheet, good luck, right? In my personal opinion, because I don't know that stuff from a QuickBooks perspective. Royce is looking at me like it's not complicated.
Actually, I do.
Hold on a second.
So my method on this is anytime I have a new property or any other new class, it goes to the CPA or the bookkeeper. They create all of that, and then when it just comes back to doing the recurring entries that are extremely easy to do, I'll do all of that myself, or in my case, I let my bookkeeper do it. But
right.
Yeah, I mean, there's details there that you will spend so much time, I believe,
trying to figure out that it's not worth your time. It's worth just paying the expert to have it done. Same with depreciation, right? Setting up your depreciation schedules. Your CPA has to have that stuff anyway. So if you have your CPA set up your QuickBooks for you, you'll probably pay an initial fee every time you get a new property, but that may be well worth it for you if you want to be a QuickBooks wizard. Most CPAs, most central processing units like to process things. Yeah, man, I'm a computer engineering by training. It's going to be tough to say CPA all night, apparently. Most CPAs prefer that you use QuickBooks, right? It's a very simple handoff of, hey, here's my QuickBooks file, and they go, oh, hey, thanks, and most of their work is essentially done for them. There is software out there called Quicken Rental Property Manager. Any of you guys using this? Okay. Don't? I don't know. None of you are using it. Apparently, I've not used it. Apparently, it's decent, but it's still not going to be QuickBooks, right? So your accountant is probably not going to be like, oh, you're using that, that's fantastic. They're going to be like, can you just use QuickBooks instead? So if you're going to pick one to learn, if you have a larger portfolio and you're already paying for Buildium, AppFolio, Propertyware, there's other kind of giant things that have all-encompassing solutions. They have their own accounting built in as well, right? You see it when your property manager generates use statements, and so you can kind of judge based on which one they're using as to how well that may or may not work for your CPA and your situation. These are typically more expensive solutions than just hiring somebody to set up QuickBooks for you. You can use my tracking spreadsheet, which if it works for you, fantastic. If you like bigger pocket spreadsheets better, that's also okay. No one's laughing, it was just for Nick. Or you can go create your own, right? In reality, it's not that complicated, right? If you think about having your CPA deal with I bought or sold a property and having your CPA deal with depreciation, which are the two most complicated things you're going to do, the normal stuff that comes and goes is like, hey, I paid the mortgage and I got rent. Oh, and I had this expense on the house. That's really all that basically happens on a single family home during a month. And sometimes it's just, hey, I got rent, I paid the mortgage. I got rent, I paid the mortgage, right? Doing that 12 times a year, that's not complicated, right? Everyone can write that down. So if you want to build one, do it. And if you already are happy with your solution, there's zero reason to switch, right? I'm not here to convince you that I have the best spreadsheet in the world. If you don't like my spreadsheet, I'm totally not offended, even though it seems like it. Royce.
Do you talk about the difference in why you might want to have a double entry accounting system?
No, I don't cover that at all. You want to talk about double entry?
Yeah, so I think it's really important in the reconciliation process to have something like QuickBooks, which is a true double-sided accounting process. And so I think when you're doing just rentals, it's a low enough volume of transactions that it's pretty easy to spot check and use a spreadsheet. But if you have, if you're doing fix and flips and you have hundreds to thousands of different transactions going on, if you're at scale, then I think it's really important that you have that foundation and a good reconciliation process, which comes along with the double entry accounting.
Right. For those of you that don't understand double entry accounting, essentially you are going to debit from one account and credit to another account. So you can never actually have a misbalance because QuickBooks will be like, hey, it's not right, right? You've not matched everything up. So that's what double entry actually is. So I'm going to cover tonight kind of everything that I use, and as I went back to review this presentation, because I've given this, I think, 2 other times. I think the last time was like 2 years ago, actually, although I didn't think it was that long. But since then, I've changed kind of who manages my properties. I don't manage a lot of my properties anymore. A property manager does it. So I've got some updates in here as to what the differences are and how I think about them. And then we'll talk about how to present the information to your CPA at the end. But I'm literally going to cover everything from my filing cabinet to how I store my files online to what I do when I buy or sell a property. So it's not just the, oh, hey, I got rent, where do I put that? And then I'll cover the spreadsheet and how to use the spreadsheet. And the spreadsheet is on your website somewhere.
Yeah, if you go to the learntobirich.com website. Got to remember my own rules about speaking into the mic. If you go to learntobirich.com, on the homepage right now, it's on the left-hand side. There's a link that says downloads. It has both your deal analysis spreadsheet, the bookkeeping spreadsheet, and a bunch of other stuff on there.
Yeah, and just for the record, James is, last time we taught this class, I showed a sample of James's online version, essentially, of my spreadsheet. And he's working on the Nomad calculator, and so it will probably fit into that at some point later, and it's being modified, so it's not currently available. But that is, again, coming. So online storage. How many of you guys know what Dropbox is? Perfect. So Dropbox is amazing. You can tell there's going to be a long slide because my text got really tiny. I'm like, man, that looks small. I think it's just James's computer. So Dropbox is awesome because you can access this from any computer. One of the great things is, I'll be out to dinner with James and he'll get a call or something and somebody will be asking what rent is on a property and I'll pull my phone out and be like, Dropbox, slide to the property and I'll be like, oh, the lease, I've got it signed, it's $17.95 a month, right? Instant access anywhere you are, any computer, and it's secure, which is my next bullet. It can sync to multiple computers. So if you've got multiple people working on your business, like Denise says, hey, would you like to do my books, Daniel? He says, okay, for free rent, I will do that, right? And maybe a stipend. Gotta negotiate a little, right? But you can sync it to multiple computers and multiple people can deal with the files at the same time, which is pretty awesome. You can share individual files or folders. So if Tammy says, hey, you want to list that property you have in Longmont, I can simply go to the folder that has all of my recent photos and share just that folder with her. She pulls the photos down, does what she wants, and I can unshare that folder. She can have access to the information. I can do that on a specific file level as well, which is pretty amazing. If you want to send your attorney or your CPA or something else, someone else, that information, it's super useful. Hey, CPA, here's my file on the purchase. Right? You go and you take the information you want, come back, let me know when you're done. And email size limits are a pain. So I don't know how many of you guys use different email clients, but if you're trying to send something, sometimes it's over 10 megs, it just says, nope, can't send it. You don't have to deal with that crap anymore, right? Just send the link and anyone can access it. So get away from that. Shared folders, also awesome, right? So if I have a partnership with James and Royce, we simply set up a shared folder on Dropbox that syncs to all of our computers. And if I am in charge of, say, rent and leasing, and James is in charge of maintenance, and Royce is in charge of something else, he just drops in the files to the folder, and they automatically sync and notify me when they sync to my computer. So very good notification system, very good interaction for partnerships as well. Pricing. So just in case you want to know, the basic version is 2 gigs free. You can do all sorts of like crazy, like, oh, I referred somebody, I liked you on Twitter, I liked you on Facebook, to get a few more gigs. But really, probably you're going to run out of space at 2 gigs if you put any videos or any pictures of your properties up there. You'll run out very quickly. The plus version is 1 terabyte. It's basically $99 a year. Well worth it. This kind of sucks. For those of you that already bought extended version history, it was $39 a year. They're no longer offering it. So if you have it, don't stop your subscription because you basically get 1 year file revision history, which means if I delete something today and 9 months later I'm like, oh, I need that, it's still there. Now, the only way to get that is to buy Professional, which is $200 a year, and it's only 120-day revision history. So they've shortened it for whatever reason. But if you already have bought that, don't end your subscription. I went and looked and I was like, oh, I have it still. And they're going to keep charging me the $39 a year, but you can no longer buy it.
I think it might still be available because I was just on it today and I saw that ad for it.
You can get this. I went and looked.
No, I saw it for the $39.99.
That's weird because I went and looked and it literally says on their website, like, extended version history is no longer available. You must buy Professional to get it. Okay. So Royce is going to look it up. And then there's a business subscription, which if you had a really large portfolio and you had a company of people working for you, it's basically $12.50 per user per month. In all likelihood, that's probably overkill for everyone in the room. So especially if you hire a property manager at any point, they're going to handle a lot of this for you. Any questions on Dropbox? I have the squeakiest shoes ever tonight. So, do I want to talk about it? Yeah. Which one? The reversion history. The revision history of me losing it? Sure. So some of us have large personal storage files from Outlook that have, oh, I don't know, 30 years of email history in them. And when you buy a new computer, you move that file to your new computer, which I did successfully. And after about a month of using the new computer to make sure everything was great, I deleted it from the old computer, and it was on Dropbox, and I also removed it from there, and 30 days later, my computer died. And so I was like, That's not good. Thankfully, I emailed Dropbox, and they were able to, even though it was past the 30-day deadline, which is then I bought extended revision history after that immediately. It was after that, but they were able to find it, and it contained most of what I wanted, but it's not worth the risk. $100 a year is a very, very small price to pay to secure your data. And James probably has, what, 1,000 terabytes of information on Dropbox? Yeah. So online folder structure. This is really the meat of, and I think I stole some of this from James and then I modified it to what I wanted it to be for me. And there are a million ways to create your online folder structure. So this is essentially where I store on Dropbox all of my digital documents. So I have a top level folder called REI folders, right? Real estate investment folders. And then for any other partnerships that aren't just solely owned by me, right? This came up the last time I taught the class. They're in a separate top level folder. So if James and Royce and I have a partnership and it's called ABC Holdings, or when we bought 1234 Main Street, I will have some other folder there that represents that partnership that's separate from just properties that I own. Next level basically is the name of the property. So under REI folders, I basically have all of the addresses of all the properties I bought. And inside of each one of those folders is all of this. So I've got purchase docs, I've got refinance if applicable, right? I've got 1.2 would be sale if I sold the property, which isn't shown. I've got trust docs, which if you want to learn about trusts, come to asset protection in July. Property info. Property info is a collection of all the photos, all the video, kind of anything that's related to the property. Like I will take all the listing photos from the listing when I buy a property and I will drop them in there. I will take all the photos that I took of the property after I bought it before a tenant moved in, and the video. All the stuff that we talk about in managing a property, all that stuff goes in there. When a tenant moves out, I take pictures. That's where they go. When a tenant moves in, I'll take pictures. That's where they go. Mortgage, fairly straightforward. Anything to do with the mortgage, right? Your mortgage statements, your escrow disclosures, anything like that. Taxes, this is property taxes. This is not where I put stuff about income tax, but all the property tax stuff goes in there. Insurance, obviously all the insurance stuff. HOA if you have an HOA. And then number 8 is expenses. So as all those little things add up, right? I get a receipt, I go to Home Depot, I buy a smoke detector, I will scan that receipt in and I will file it in the expenses. That way, if I ever want to know, hey, I don't know what this charge is for, I can simply go to the expenses folder and easily find what that was. I have a hole in my mouth, apparently. Can't drink water today. And then the last folder, depending on whether you have a property manager or if you are managing it yourself. So this for me, before I had a property manager, just used to say tenant info. And inside that folder, I would have, hey, James is living in this property. He's my tenant. I've got a folder for James. When he moves out, I add the dates when he lived there, and I leave it there, and I make a new folder with the next tenant's name inside that folder. Right? So basically, in a nutshell, I can immediately go and find anything I want very quickly, essentially REI folders and one other click into these folders, and I'm at the information I need. So I didn't want a huge directory structure that was really difficult to navigate. I wanted to be able to get there very quickly. Any questions on that?
So I just want to make some clarification questions about stuff. So in your taxes folder, as an example, are you breaking it down to separate years, or are you just doing like dates on the files that you put in there? So
I'm glad you asked. So all files are named like this: year dash mm dash dd, property address and description. So here's an example, right? 1234 Main Street, settlement statement on the date that it was actually there. So in the taxes folder, because there's not a lot of property tax stuff that goes on, right? For me, I don't have a separate folder inside there for like 2017, 2018, because there's literally like 1, maybe 2 documents that are going to come. However, inside tenant, I do have separate folders. Inside expenses, if it's like the first year I've got like 50 receipts, at the end of that year, I'll combine them and put them in a folder that's 2015, right? And then if there's only 3 the next year, I probably won't do that.
So it's
right?
sort of like a convenience thing. If you notice
Yeah.
there's 30 files, you might group them into rent-ready repairs or something like that.
Yeah, because in all honesty, insurance gives you maybe 3 to 4 files a year. Taxes is 1 to 2. Mortgage, you're getting at least 12, 13 probably a year from your mortgage company, right? 12 statements plus an escrow disclosure, maybe 2 escrow disclosures, maybe something else. Your loan gets transferred, all the stuff that happens with the mortgage. So maybe you want to do that for mortgage, but for HOA, you get the HOA documents like when you close or before you close, and then it's like 1 bill a year, right? So there's not a lot of files. So it's really convenience inside those folders. Other than if you're managing it yourself, I think tenant and separating that is super important.
Are you doing any separate folders for LLC-related documents?
That's the bottom of this slide.
Okay, I'm sorry. I'm
Yeah,
like jumping
I
ahead.
can't pay you $20 for that question yet because it's early.
Okay, so I'll hold off. If you had a multiple refinance, would you separate those into separate folders?
Yeah, so I actually have one where it's purchase, 1.1 refinance, 1.2 refinance, 1.3 refinance.
Okay, so you would actually put it in separate, like 1.1, 1.2, 1.3, instead of doing refinance in 1.1 and then having 3 different folders within that.
I personally do that. You can do this however you want, right? This is whatever makes sense in your head. I would suggest doing that. For me, I want to be able to open this folder and go, oh, I've refinanced this property once. I can immediately see that, right? Whereas if otherwise, I have to dive into another folder and go, oh, there's 3 folders, blah, blah, blah.
And for something like mortgage where you're getting one every month, are you like doing
I just have a long
yours?
list because I hardly ever access that information.
Okay, cool.
Yeah. Royce. So you can all blame this format on James, which he's going to blame it on Tammy.
No, that's me.
Oh, okay. Yeah. So if you're using James and you do a closing, all of the files will be named in this format. So I would highly suggest adopting that format if you're using them, because then you don't have to do any work. They'll send you all the files. So I basically scan all these files in. I save them as PDFs. Someone asked last time what I use. I have an HP OfficeJet Pro 8600 Plus. It's a simple scanner, right? I mean, you don't need something super expensive. I would highly recommend one where you can stick more than one page in at a time, though. If you have to, like, scan, that is not fun. But that's been working for me for at least 6 years since I bought it. Royce.
I will make a case for so I have a Fujitsu ScanSnap. It's like stupid expensive scanner, but either using that or scanning directly into Evernote. Evernote will do it by default as well, and it'll make all your PDFs searchable, which I've found to be extremely useful.
Yep. There are tons of options out there. This is what I started with, and had I known about that when I started, before I had thousands upon thousands of files, I may have done it. But at this point, I have a system, and it works very well. And you can ask any CPA or any attorney or any closing agent or James or Tammy, hey, can I get this piece of information? It's 3 seconds later in their email, right? It's very easy to use and find, which is a huge deal if you're trying to buy a property and your loan officer says, hey, I need these documents from you. If it takes you 2 weeks to get them, it's 2 weeks of wasted time, right? My loan officers are basically like, I can't believe you sent me everything, and then they'll be like, hey, I need these 2 things. It's like within 60 seconds reply to their email. So make life on yourself very easy.
I'd like to just add one comment. So Royce had mentioned Evernote, and so a long time ago, probably 15 years ago or so, we were using a proprietary sort of like company that did organization of files and stuff like that. And companies come and go. And so all the stuff that we had in that system ended up just being completely worthless, all the organization and everything. We had to redo the whole thing. And so this is why we went to a file-based system on Windows, because that seemed to be the one that was least likely to go away. And so while Evernote seems like an awesome tool for getting organized and being able to scan the PDFs and everything else, I just take it with a grain of salt that there may come a time when Evernote is no longer in business.
Yeah.
So.
Wait for the mic.
One of the great things that I do with Evernote and the Dropbox combo is every note is backed up, then an attachment is backed up to Dropbox. So it definitely makes a big difference.
Yep. And James and I have used OneNote, which is the Microsoft version of Evernote. Royce says no one likes that. Unfortunately, I think you're incorrect. But so James also asked, hey, what do you do with LLCs? Because as many of you know, in asset protection, the basic recommendation is that you have a master LLC here, and then there are LLCs. That's a nice box, huh? There are LLCs here, and so properties are here. Right? And you can imagine more properties here. And so what do you do with documents that are related to LLCs? And so I have a separate high-level folder called Entities that is on the same level as the REI folders. And James says, well, why would you do that? Why wouldn't you just have ABC Holdings has 1, 2, 3, 4 Main Street and 4, 5, 6, 7, 8 Main Street and have them in that subfolder? And really for me, it's because when something happens to a property, you don't stop and go, oh, that's ABC Holdings. You go, oh, that's 1, 2, 3, 4 Main Street. That's where the phone call came from. And so there aren't a lot of documents that apply to your entities other than when you register them and an annual periodic report. So you're not really accessing those folders very often other than when you create that LLC. So that's why I did it separately. You are more than welcome to design your folder structure however you want, but this works really well for me.
And I will also suggest, whether you do a Brian's way where he has the high-level one, or you decide to do high-level and have properties underneath, you can link folders. So you could make a shortcut from inside the LLC one to the specific properties that are in there, where they go directly to those, and vice versa. You could do the, if you had them all in there, the LLC, you could go link to the individual properties. So that's one solution to that kind of.
Yep, and I actually do use links. Thanks for bringing that up. I do use links because sometimes property managers will base your property statements on the LLC. So if you have 3 properties that are under property management, basically what I do is I put the files all in one of these folders and I link the other 2 properties to just straight point to that folder. Does that make sense? Perfect. Any other questions on that? Excellent. And I already talked about that. So online storage, non-Dropbox. There's a bunch of other places we get information about properties that we still need to manage, right? One is emails. You get tons of emails from tenants or loan officers or your agent or whoever you're dealing with, your CPA. You need to find a way to file this, especially tenant communications, right? All of this stuff you need to actually store and back up. So how do we do that? For me, it's in that file that I have from Outlook that I lost, right? And I back that up to Dropbox regularly. If there's something super important in a file that's coming in and the loan officer sends me, hey, here's a document you need to sign, I'm going to sign it and I'm going to scan it in and I'm already going to file it in the Dropbox storage already. So I'm not going to have to worry about that. But for email, this is what I'm doing. Texts. How are you guys going to store text? When are you getting texts? Tenants. Yeah, it could be tenants. It could be people working on your house. It could be your agent. It could be whatever else, right? For me, it's obviously kept on my phone, but at some point, if a tenant's like, hey, there's a major problem here, I want to make sure I've documented that, right? So I may send an email back, but I'm going to back this up regularly. So I'm going to plug my phone in or download it to iCloud, but I'm going to back that backup onto Dropbox as well, right? Dropbox is essentially my go-to for everything. Royce.
Yeah, so iPhone users, I think, you can go to iCloud. One of the things that's horrible with Android is you switch and you tend to lose all your messages and everything else. So there is an app called SMS Backup Manager, and you can have it back up directly to Dropbox, and I started using that about a year ago, and it works really well.
James.
Hey, call me paranoid, but save your texts from tenants who you don't actually rent to as well for fair housing reasons. So be super paranoid about that.
Yep, so any application that I get from a tenant, I actually save that application, not any of the banking or any of the financial information that comes with it, but the actual straight application with a picture of their ID and then my evaluation of that, and it's in a folder. I actually don't scan them. They're in my filing cabinet because I don't want that information online personally. So if something's super important, I would highly suggest taking a picture of it and dropping it in your tenant folder on Dropbox. That way you don't lose it. If they're complaining about something and you're not going to fix it and you're having any kind of dispute, I would immediately save that to make sure that you've got record of it. Phone numbers. For me in my phone, there's like first name, last name, company name. And for me in my phone under company name, I put the property address so that if somebody calls, it shows up as James Orr, 1234 Main Street. So I immediately know what property this tenant is calling from, and I can choose to accept the call or be like, oh, it's a tenant phone call. I'm at dinner with my family. I'll call him back in half an hour. Any questions on other non-Dropbox stuff? Because it's important to keep that. Kim, hang on one sec for the mic. Mic runner.
So are you saying you store all of your emails on Dropbox, or are you just saying like if I got something from an attorney and I want to put it and I want to store it, then I store it in Dropbox?
So for me, I actually have, maybe I don't have this coming up. So inside Outlook, if we imagine inbox, I have folders for my properties here as well. And then underneath each property, I have a tenant folder. So if I get an email about the property, it goes in this folder. If I get an email from the tenant, it goes in this folder. This entire thing is in a local file that I then back up to Dropbox. What's that?
An archive file?
Yeah, an archive file. In Outlook, they're called PSTs or OSTs. If you're using Gmail, it's kind of already backed up to the server automatically. You may have to pay for more storage once you run out. Outlook just slowly grows your available space over time. Does that make sense?
And I'll say one of the things I do, I use a service called Zapier. I use it for a bunch of different things, but it kind of is this event-triggered backup that I use. So if I flag something in my Gmail inbox as like receipts, for example, it'll automatically take it and go file it away in the folder that it runs. But that's an extra $20 a month, and I use it for other things, but it makes it super easy.
Yeah.
So you don't need to bother if you have Gmail?
James is a Gmail guy. He can comment on that. I believe it's all backed up because it's already on the server. So as long as you're archiving it all, it should be fine.
So I don't do redundant backup for Gmail itself because it is stored on there. I do pay extra in order to have extra space because I ran out of space like a decade ago. In addition to that, we have a separate CRM, like a contact management system, and all the email exchanges between me and clients and tenants and all that other stuff gets backed up to the CRM and stored attached to their contact record. So there's a redundancy for the CRM I use, but if you're not doing the CRM, I probably would personally be okay with it being backed up with just Gmail by itself, but that's just me.
Yep. So physical storage, right? There's also a need to have a physical filing system. Mine has been trimmed down. I consistently trim it down year after year. But you're probably going to need to keep some documents like the deed, like your signed lease documents, like the note, right? Anything like that, you're probably going to keep. So I have a legal size 3-drawer black filing cabinet that sits in my office, and each property gets 3 folders. And this was kind of how I set up my system. I don't know if this is based off James or not, but basically the left tab, so you can imagine little tabs that stick out. The left one is the purchase, right? It's the first thing that comes up, and that's usually, in some cases, a super thick folder because you've got inspection and all the documents from closing, and I just kept all of those for a really long time. The middle tab was mortgage because I felt like that was important, and I'll talk about what I did in my update. Basically, anything dealing with the mortgage, a lot of properties when you buy them, like 30 days after you buy them, you're going to get a transfer of loan, which is a pain, especially if you get a bunch of them at the same time. Then you get to deal with a new mortgage company and setting up auto pay and all that stuff. So all that basically went in this mortgage folder. I had a middle tab too. So it's not really 3 tabs, it's really 4, but it was for expenses. So when I was managing my own properties, especially in the beginning when I would go out, have an inspection done, and then I would take care of 90% of the stuff on the inspection report, I would have tons and tons of receipts, and I didn't know where to put those. Now they're all digital and they mostly go in the trash once they're scanned in, but in the beginning I was in the mindset of I want to keep everything just in case, right? And at some point your filing cabinet just becomes too huge. So I would highly suggest, if you're doing digital stuff, that's typically good enough. I've never seen a case where, hey, I've got the digital copy of the receipt I had or whatever, and it was denied. I'm sure there is a case where that's happened out there, but I do not know about it. And then the right tab, which changes, right, is your tenant. And this is the kind of one that has the most stuff happening with it, right? This includes the reservation deposit, the lease, late utility notices, HOA violations, anything that deals with the tenant that you get is going to go inside of that physical folder. If it's multifamily, right, you've got a duplex, there's a folder for each unit. So this is where you can imagine if you buy an 8-plex and you're managing it yourself, you've got 8 folders for tenants there. You start having a lot of documents.
I'm going to make a case for doing the digital storage of the expense receipts. A lot of the expense receipts are printed on thermal paper, and the thermal paper, after, I don't know, a year or two or whatever, they tend to become really hard to read, if not impossible.
Yep.
And so you definitely want to go to a digital version for the expense receipts.
Yeah, and to be clear, every single thing you're putting in these folders is already redundant because you've already scanned it in and put it in your folder that corresponds on Dropbox. So you're already doing that, and that's why you'll see in my update, I don't really have the expenses folder anymore because I've done away with it. So as tenants move out, I basically have a giant bottom drawer that is archived of previous tenants, and I stick all of the former tenants in that. There's also a separate folder for each LLC. So much like the online Dropbox storage, you basically have, hey, ABC Holdings LLC, and that's got your LLC registration, your periodic reports, anything, your operating agreement, anything to do with your LLC, all of that stuff is in that physical file as well. Because I want to have copies of my operating agreement that's actually physically signed just in case, right? I've got it scanned in too, but I want it physically signed. So what I realized was when I originally wrote this presentation, that's how I did it. And so what happened was I turned the majority of my properties over to property management, and some things changed because of that, right? The property manager takes over a lot of this record keeping for you, which is awesome. So now really what happens is I have each property basically having 1 to 2 folders in that drawer, right? The first one is still purchase docs, although what happens is besides all of the normal purchase docs that come in, it basically ends up being a catch-all for that property because I don't have a lot of physical documents that I'm getting about the property. And so if I get something that's, related to the property, I'm just going to stick it in that folder, and I'll always know where it is. And that folder, for me, at most is this thick now, right? Because I've gone through and I've taken all the stuff that I already have digitally that doesn't matter if I'm going to need it, right? Like the TD 1000 statement. I'm probably never going to need an actual physical copy of that. I've already got a digital copy. So I just shredded the original and kept the digital one, and that folder got drastically thinner. I'd highly suggest you keep signed versions of notes or deed of trusts, signed versions of leases, things like that where your actually physical ink matters. But even then, if a fire burned down your house, you should have a backup digital copy. The middle tab, for some of the properties where I've got a more complicated mortgage, I do have a mortgage tab, so commercial mortgages where there are inspections and other things besides just a regular monthly mortgage statement, I've got a mortgage tab. But in all honesty, you could simply do away with this and have the one folder, and then every year go through and cull out, well, I don't need these previous year 12 mortgage statements, I'm going to shred them. Any questions on that? I'll take that as a no. So what happens when we buy a property? Lots and lots of documents. You guys are experiencing this, right? It's like 2 properties in 3 months. Suddenly you've got 2 huge closing file statements, right? This is where I get behind, right? And this is where this is like, if you don't stay on top of it, I had 9 refinances at one point a couple of years ago, all within the same month. And I was like, okay, well, this sucks. And 9 huge folders sat on my floor for a really long time. And then one day I was like, all right, it's time. I'm going to just plow through it. And it literally it took a long time. I was like, okay, I wish this was done. So save all your emails, right? Back in this email folder, right? As all those emails come in, title commitments, preliminary title commitments, Tammy and James are sending you stuff, just save all of that stuff, right? This is my strategy. I save all of it. If you've got any file attachment, we're pulling those out. We're dropping them into the Dropbox storage, right? So if you keep up with this, it's very, very easy. Basically, scan and name any and all documents as you get them, any physical documents. And this could be any of those things. File them in the appropriate digital folders on Dropbox, and then enter them in the tracking spreadsheet, which I'll get to in a minute and show you how to use that spreadsheet. I would, again, I mentioned this earlier, save the photos from the original listing. They'll be online for a while, like Zillow or Redfin or whatever, but eventually they just get rid of them. So, huh? Yep. Get digital copies at closing. So I never used to do this. I would just be like, yeah, just give me the paper copy. I'll go home and scan it in. I'm stupid, right? Don't do this. Just have James and Tammy send you the files after they've taken care of them. It makes it much, much easier. Or get the digital copy and it's just sent straight to you and you can drop it right in your folder and rename it.
So I have a comment on that. So we get all the real estate closing documents. We do not get your loan documents.
Yes.
So some of the stuff we cannot send over to you because we don't have them.
Yep. So you still need to get your loan docs. That's a good point. Thank you for calling that out. So inside my purchase doc folders with my property name redacted, this is from an actual folder. This is what's in there, right? There's a lot of stuff, right? I mean, it starts out, it's like, hey, what's the first thing? Oh, contract to buy, right? And then you've got all the counter proposals, property disclosure, water addendum, square footage, right? And then you get to earnest money, and then you get occupancy disclosure, earnest money cleared, and then the lender asks you for some silly stuff like, hey, tell us the addresses you've always ever lived at, right? And you tell them once, and they say, tell us again, and you tell them again, right? This is craziness, right? Inspection, loan application, right? There's a letter here that says there's no lease currently on the property of the lender, right? And then you can kind of see on, must have been April 29th, that's when closing was, because these are all closing documents, right? Both loan and documents from title. And then there's a couple things that come in after, right? You get refunds for utilities or refunds for overages, and you finally get your title policy, which is like, in this case, almost 2 months later. So I guess they are within their 60-day window. But a lot of times, note you'll just have to ask for that from some title companies or from some sellers. But there's a lot of stuff that goes into it. So get ready for all those docs. So managing a property, right? How are we going to manage the property? What happens with documents, right? Tenant communications we talked about, we're already saving those. We talked about how to handle it. Make sure you back this up. If you ever have to go to court, right, and you're like, well, the tenant said this, and you don't have it, the judge is going to be like, prove it. And if you can't prove it, it may not go in your favor. Each month, enter all recurring items. So if you're using QuickBooks, there's a recurring option where you can literally just say, do all the recurring things. And it says, yep, I got rent, I paid the mortgage, I paid the HOA, and it adds all those entries into your accounting for you. Typically, right, for a single family home, it's really just rent, a mortgage, and maybe an HOA, and maybe a utility payment. Right? So once you're set up, right, don't think about this as being super complicated. Think about it as being really easy. Every time I talk to my mom on the phone, she's like, I don't know how you keep track of everything. And I'm like, well, I have this nifty spreadsheet. But I'm like, Mom, it's like you pay your mortgage every month and you got your paycheck from work every month, right? It's like it's no different than that. That wasn't hard for you to keep track of. She's like, yeah, that makes sense. So it's not that complicated. If I can get you to believe anything, once you're set up and once you have a system, regardless of the system, it's not that hard to stay on top of. If you use the shoebox system and you just throw all your crap in a shoebox until the end of the year, then it sucks, right? You've just kind of blown your ability to keep on top of it.
I got a comment, and then I'll go over to Josh. So to comment on the tenant communications part, the best practice is when you have communication with your tenant that is not written, it's not email, it's not text, is you need to document your conversation in writing. So basically, I talked to the tenant at this time, we discussed the following 4 things, and in an ideal world, you should document that in email back to the tenant to document what you discussed and what the outcome was. And really, sometimes it's documenting all of your tenant experiences so that you can show a judge that you never had this conversation, never called you, and you always document all of your other conversations. So it's pretty clear that you never really discussed that. So.
Yep.
If you do use the shoebox system,
Not saying that you do.
There's actually a company called Shoeboxed that you send them all of your receipts, and they will scan them all, digitize them, and send you back a Quicken file.
That sounds like a business that someone could start.
Yeah. I subscribed to Shoebox at one point too. I got tired of mailing my stuff in.
So for other income and expenses as they occur, right? You get a call from your tenant and they say, hey, the water heater's leaking, and you call up, Joe Blow plumber and say, hey, I need a new water heater. He goes out and fixes it. He sends you the bill. It's just one extra thing for that month, right? It's not a big deal. It's just scan it in, drop it in your expenses. If you went to Home Depot and bought new locks and then went out to the property and changed the locks, which we don't recommend that you do because you have liability, you should hire someone to do that for you, but that's a different class, right? Just simply enter it in the spreadsheet, right? And the spreadsheet hopefully will make it simple for you, and then obviously file it on Dropbox. On tenant turnover, right? Save all pics. We talked about this. They all go in the property info folder on Dropbox for each property. Save the video. So when a tenant moves out and they're completely out, in our tenant class and property management class, we highly recommend taking pictures of everything in the house. Literally everything. And then I take a video too, right? Just in case I miss anything and I'm like, this is where I'm at, and pull the fridge out, take a picture behind the fridge, take a picture of inside of the oven, inside of the microwave. This proves, was it clean, was it not, right? I had a tenant once come back and dispute their cleaning charge, and I was like, I have pictures. I think it's disgusting. Like, here's the picture of behind the fridge. Do you really want to argue this? You clearly didn't clean it. So save yourself the headache, right? Because if you can send those pictures, most landlords probably aren't doing that. Make yourself an amazing landlord. Don't just do it by the seat of your pants. This is a business, not a hobby. Anything that's related, tenant applications, credit reports. So most of you are running credit reports on something like MrLandlord.com or UCheck Credit, or the same thing as UCheck Credit. My Smart Move. It's basically all the same thing. I think most people are like, oh, they're storing it. I actually just copy the entire file, save it as a PDF, and put it in my tenant folder, right? Because I don't know if that service is ever going to go away. I don't know how long they're going to keep those credit reports. You got a question up front. New lease docs, right? Their move-in inspection, anything that's related to that tenant. John.
So more of a comment that we actually work for a company that sells credit reports, and we only back up those credit reports for 3 years. So after that, they're destroyed.
Right.
So after 3 years, even we will not have access to those reports.
Right. And the reason I keep them isn't to keep personal information. The reason I keep them is if I ever have to go in front of a judge and say, this is why I approved these applications, and the person who got declined is saying, well, he's being unfair to me, I can be like, here were my written criteria, which we teach. Here was why I approved these, and here's his credit report that I looked at that shows why I declined him. Right? So I am covering my own base. Where'd the mic go? Oh, did you have a question? Oh, okay. So update to that, right? Again, I turned a lot of my properties over to property management. So how am I handling this stuff now, right? It gets amazingly more simple, right? In this case, I don't deal with all the minor expenses and all the maintenance and upkeep of the property. The property management handles that for me. So each month, I download and I review. You should all review your property management statements every month. And I take that property management statement and I obviously file it in my Dropbox, right? In that folder 9, tenant and property management. If there are income and expenses, which occasionally happens that they don't handle, right? HOA comes directly to me and I pay it, right? So in that case, that's an expense. I'm going to handle it. I'm going to enter it into the spreadsheet, right? No big deal. I'm going to download that same file just like we talked about before, and file it physically and digitally as needed. James.
Just want to make a comment about the reviewing your property management statements. Is that we did have a class where you went over how to review those. I think it was how to select and manage your property manager. So you go over in detail how to do it there if you want to watch the recording.
Yeah, pretty much all the asides and tangents in this class we have a class on. So you can go listen or watch those. So you can also choose to enter all the information from that property management statement. You can look at that and go, oh, rent was paid $16.95. You can enter that in the spreadsheet. Oh, they paid for new locks. They paid for, fixing of a window. They paid for new blinds. You can choose to enter that into the spreadsheet if you would like that full picture. You're more than welcome to do that. When you get too many properties and multifamily properties, this becomes unrealistic and just no fun. So in an effort to make it fun, I'll talk about at the end why I don't do that now. And I did it for a while just so I could see and have a picture of where my properties were. But the majority of this is now in the property management report every month. So I already have a report. I don't need to recreate that. And I'll tell you how I hand that to the accountant, and maybe I'll tell you right now because that's what this bullet is. So what I used to do was just say, here's all the property information in the form from the spreadsheet. Now I say, here is the property management report for the year, and here are the 3 other expenses or incomes I had. And the accountant will then take those. She'll start with that property management statement because that's 99% of it, and she'll just add in those 3. And that's worked really well. So if you've got QuickBooks, you can totally do this yourself, but this is how I do it, and I've done it this way for years, and it's worked well, and we've kind of adjusted it each year to make it a little bit more streamlined. Mike.
So if you're using QuickBooks, do you just say, expenses, like the property manager says it was $10,000 or whatever, you just put expenses 10,000 and then you don't list it all out of every little detail?
So this becomes more difficult, right? What's probably happening is you're probably entering expenses as they come in off that property management statement, because some of those are going to be labeled as CapEx expenses. And so you want to be able to know this was CapEx and it was flooring for unit 2 and it was $3,258 versus I had $11,500 in expenses for the property. So I would highly recommend talking to your CPA and asking, how do you want me to do it? Do you want me to just call out CapEx individually and then put expenses of this, or do you want me to enter it every month and actually line item all the stuff that's off the property management report? In most cases, your property manager can probably give you a file that you can simply import into QuickBooks. So I would ask your property management about that as well.
And unless, I guess, if you're doing your own taxes, then you might have to enter it into QuickBooks yourself. But at least for me, the CPA I use, she just wants me to give her the statement from the property manager directly. I have a one-time per year bookkeeping fee, essentially, where she puts that all together and it goes. So really all you're doing is managing the property manager up until the end of the year, and then you're just handing over the entire statement along with, all the bank statements and everything else.
Yep, and I will go back and I will look through at the end of the year and say, okay, I'm going to look for any large expenses that occurred on this property. Because if they're CapEx, I want to be able to call them out. And there are different rules depending on how you are filing your taxes on whether or not you're going to want to claim it as CapEx, take it directly as an expense, take the 50% from the, what is it called? Safe Harbor, right? The Safe Harbor Act, you can take it as 50%, but there's all sorts of rules. So talk to your CPA about that. I'm not going to cover it here because I know the rules as they apply to my business. But if you talk to your CPA and you come up with something that works for you and your CPA, that's the most important thing, right? This system may be crap for you, right? For me, it works really, really well because I don't want to use QuickBooks. I've made that active choice. I'm just not willing to do it. And if I was willing to do it, I would hire a bookkeeper to do it for me, right? I'm not going to take the time to do it. There's just too much going on, and I've got better things to actually spend my time on than entering lots and lots and lots of stuff into QuickBooks. So here's an example. I feel like I skipped a slide. Here's an example. I'm not sure of what it's going to be. So I checked my mail. I had a utility late payment notice, which you'll get those. You should be signed up for your tenants to be notified if your tenants aren't paying their utilities from all of their utilities. Water is a lienable utility, so if your tenant leaves the property, it doesn't matter that it was in their name. It's lienable to you. The city can put a lien on your property. So these are the 2 things I found in my mail. I literally went home. I scanned them both in. I named them as appropriate. I filed them. I paid the HOA by check. I entered it in my check ledger. And then I entered the information for the HOA payment into the spreadsheet, which you'll see shortly. And then I filed both physically and digitally. And I obviously emailed the property manager and said, hey, the tenant needs to pay their utilities. And they said, no problem, we'll take care of it. So That's like a normal run to the mailbox for me. There's probably 1 or 2 things in there I need to deal with. No big deal. If you do this that day, super easy. Some people will decide, you know what, I'm going to set all this in a pile, and 1 day a month, I'm going to clear that pile. That's fine too, right? Just make sure you're not paying them late. That's how simple it can be. So, James doesn't like the once a month pile.
Well, if it's 1 or 2 properties, once a month is one thing. If you get, a dozen properties or more, it starts getting crazy.
Right. So selling a property, right? Obviously the same thing. It's just like buying a property. Get digital copies of your stuff at closing or scan them in. File any other last items that come in from the property. Lots of stuff trickles in, right? Your final utility bills, the final refund from the utilities at closing. All this stuff slowly trickles in. So it's like, oh yeah, I'm done with this property. And then 2 months later, you might actually be done with the property. And then you get to close your LLC down if it was the only property in the LLC. And then you're waiting for those documents. So after that year's taxes are done, right? You do the income taxes for the year in which you sold the property. I would suggest moving this property out of your REI folder property because you no longer own it. So it shouldn't be taking up some headspace. Move that into an archive folder, right? That's just simply properties I used to own, don't own them now. Is there some weird stuff going on outside?
There's an alarm going off, but I can't see the car anywhere.
Archive your physical folder as well. So I'm pulling that folder out that was the purchase, the expenses, the mortgage, the tenant information, and the sale, and I'm going to archive that. I'm going to go through and I'm going to clean out anything I absolutely don't need from that folder. And then I'm going to take that and I'm going to file it somewhere permanently. All right, spreadsheet walkthrough, which is going to be interesting since it's over here. James, maybe you should come run the spreadsheet. Did you open it?
No, I didn't open it.
All right, I'm going to let you run that. So this is the spreadsheet that's designed to be super simple. If you want to go to the income tab for me. Actually go to drop-down lists for the beginning. So essentially, when you get a property, all you do is you simply add it into this list, right? Everything else, I love Brian, perfect. So we've added the I love Brian property if you have a new LLC. So sometimes LLCs have expenses as well, right? You have to pay the $50 registration fee. You've got a $10 periodic report. That stuff, you can add LLCs in here too and track as well. So it's simple. These are the drop downs. These are all based on income and expense categories directly from the IRS. So you shouldn't need to change those. There are others if you really wanted to change something and you needed it, you totally could go in here and do that. If you really need another category, let me know and I might be willing to change the spreadsheet. But property list, you can add properties all you want. This information is all if you want to enter it. The only thing that matters is this. So James, if you click on property report for me, and now if you just come up here to 1234 Main Street at the top and pull the drop down, just so people can see that there's I love Brian in there. So I love Brian is down there. You can select I love Brian. And obviously there's not going to be anything in it. So go ahead and go to the income tab. And so this spreadsheet is designed to basically take all of the, I need a new spreadsheet because I got a new property. It's every property you have in one spreadsheet. And you don't have to think about hardly anything because in this case, on March 28th, we got an application fee. And so we came in, and if you want to just mouse over property where it says 1234 Main Street and show them it's a drop down. So you simply select the property that it applies to, come over to income category, show them that that's a drop down. It's basically directly related to the IRS categories, right? So all those same categories you saw are in there. Pick what category it was, type whatever you want in description, and type the amount over here. You'll notice, obviously, that we've got 1234 Main Street, 5678 3rd Street, 9012 5th Street, application fee going to accept them. So you can change whatever you want in here, and obviously you're free to change whatever you want in here. Obviously date on the left is going to be important because it's going to file it in the main report by what month you put that in. right? Expenses, can you go to the expense tab for me? As you can imagine, this is exactly the same, but for expenses. So any income from any property goes in the income tab. Very simple, 4 things to enter. Any expenses that come in, right? You can change it to I Love Brian.
No, I was just showing them that they drop down.
Yes. So same drop downs, different items in the drop down, right? One is income, one is expenses. And just scroll down a little bit so they can see there's a kind of long list of expenses here on the page. He doesn't have a mouse wheel apparently. Perfect. Oh. So that is all you need to do to actually use the spreadsheet. That's all the input you need to have. Type your properties in on the drop-down list page and then enter all of your income and all of your expenses. So you can imagine if you were getting rent on one, you come in here, you type your rent in, you're getting your mortgage payment, you come in and you type the mortgage payment. It's that simple. Workbook is protected. You cannot mess with it. But thank you. So if you want to go over to property report now, we'll show the magic of what this spreadsheet kind of does. Can you zoom? Maybe this is okay. Pick a different property, like the top property. So you can come in here and basically select anything you want, and it will basically show you the month by month of what everything is. So rent, right? Rent started on this property in June. We got $1,650. It was probably move-in. They probably had prorated. And then we've got $1,795 for the rest of the year. If you looked at this and were like, there was nothing in September, you can immediately know, oh, did they not pay rent? Hopefully you have a check and balance for them and you would have already known that. Or did you just forget to enter it, right? So you've got a little bit of, hey, that doesn't look right.
Can you do comments in your spreadsheet? Because it's using dynamic fields, right?
Yeah. This thing's still useful. So basically you've got rent and all the income that comes here. You've got totals here showing everything. It tells you what percentage each one is. Just scroll down on the page a little so we can see the full expenses. Perfect. So this is directly again from the IRS, and I'll show you the form that your CPA or you or whoever's doing your taxes is going to fill out. This again shows you totals, shows you month by month, and then down here you basically have net income, which as you can imagine is this minus this for each month. Does that make sense? So super simple view. So scroll back up to the top for me, and then just start moving to the right. Oh, before you go too far, so James is going to make fun of me. When you use this, each year you need to put these 2 fields in. You need to type in what year it is, and you need to type in how many days are in February. I think I fixed the February thing on the version that's on the website, but this was just how I did it. Perfect. I thought so, and when I pulled this down, I was like, I swear I fixed this, and it wasn't the most recent version. So this next section, basically per property, so come over here and change the property from 1234 Main Street to 5678 3rd Street for me. You'll notice this is the itemized income and expense. So this is everything for that property pulled from that other sheet in case you're like, hey, what happened on 12/1? When you change this, all of this updates as well, right? So you just pull that drop down, select the property you want to see, and it's going to update. Let's go further right. Keep going, right about there. So the next one basically says, hey, these are all the things you have in that drop down, all your properties / LLCs, and this is going to show you your income, your expense, current profit, and then basically what your monthly profit is for each property. So this is just kind of a summary, gives you a percent, gives you cash on cash, and then if you want this done without CapEx, that's what these columns are for. So this basically has CapEx included. This takes it out. So if you mark something as CapEx on your expense sheet, it will pull it out and not show it because CapEx is typically handled differently. And if you have a $18,000 roof you have to put on a property in a year, that doesn't really mean the property did that poorly in that year, right? You're spreading that out. Hopefully you've saved your maintenance money. And then you can kind of come down here and see, here's your overall profit, here's your monthly, here's your overall profit, and here's your monthly. Let's keep going. Does anybody have any questions about any of that so far? Yeah.
If you have 20 units,
If you have 20 units, do I do one spreadsheet?
Yeah, like how would you do that?
So go back to the income tab for me. Sorry, you can stay there for a sec. These are all your separate properties. Right. So if you have 20 different properties, you just literally type them in here.
Like apartments. If you have a duplex, how do you put them in separately?
So for my duplex, I just type the address of the duplex, right? 1, 2, 3 to 4, 5, 6, North something court.
Whoa.
What are you doing? Oh, and so for me, everything that happens is by property. It's not by unit, right? If you want to call it out into further units, you could totally put units here, but your property manager won't manage it that way when you switch. And so I've never managed it that way either. For duplexes and fourplexes, it's just been stuff that comes in is related to this property, because I don't necessarily care in my fourplex how unit 1 is doing. I care how the property is doing as a whole, right? That's really, when I run my analysis on the property, I analyze it to make sure it's going to be a good buy as a property. And so if I have 1 unit vacant, I'm not going to stress that, hey, I've got 1 out of 4 vacant, as long as the whole property is doing well. But if you wanted to call them all out, you totally could. Yep, you totally could. Any other questions on this? Perfect. Back to yes. So now keep going to the right. So the other goal of this spreadsheet was just to give you a monthly or whatever kind of snapshot you want into how your properties are doing, so you could just simply look at this stuff and go, oh, hey, the property's doing really well, and at a very quick glance go, whoa, that property's lost $5,000 this year, what's going on, right? And you would immediately know. So these next things, this one is based on the property. So this basically shows you kind of exactly what was from over there, but just totals for the year, right? Nothing very different. But then I also show you itemized income and expense by category for all properties. And I thought this was interesting because if you look at this and you go, gosh, I'm spending so much money on, auto and travel. Why is it so out of whack in comparison to everything else? It gives you a snapshot into, here's my entire portfolio, and I got this much in rent, and then I've got this much in expenses. Where are the majority of my expenses falling? If you notice that utilities were 30% of your expenses, could you institute bill back to tenants, right? Could you find a way to do cost reduction on those utilities? James.
Is there a reason that insurance claim proceeds is only listed for one property and not for all properties, or is that just like an oversight?
Where?
So
I see it here.
Yeah, but it's not in the other one to the right.
Because there's nothing in it.
So it's that one, it's dynamic on the right-hand side?
Yes. This one is pulling from all of them. This one lists them all, I believe.
Okay.
Yeah, that may be, I may have fixed that. That
Okay.
may just be, I added insurance claim proceeds because I had that issue.
Okay, I just wanted to, in case you didn't see it, I just wondered if it was.
Yeah,
an
send me a
oversight.
text.
All right.
Yep, it's literally as simple as grabbing that and mousing down and it will refresh it. In fact, scroll down to right here, utility refund.
Like it's mislabeled.
And then go up one. Yeah, that's interesting. I'll check it out.
Okay,
So that's just the view that hopefully you're getting and allows you to view your properties and your entire portfolio however you would like. The goal, though, was not, this was not why I did this. This part right here is essentially what you can send to your accountant at the end of the year, right? For each property, you simply take a snapshot of that and say, here is the data, right? This is what I got in rent, this is what I got in pet fee, this is what I got in application fee, and you give her these numbers or him these numbers, and that is essentially what they're going to use to fill in the form that they're going to submit. Does that make sense? Microphone. Royce, we're going to have to take that red name tag away.
Yeah.
Kim.
So if you did do it separately for each apartment, the all properties would just be the whole property, right?
This would be any property
But if you-
inside that drop down.
It would
Yep.
just be the whole property.
Yeah, so if
it
you
would work.
had a spreadsheet that was just unit 1 through unit 20
Right.
of one building, this would be the entire property.
Okay.
Yep. Anybody else have questions? Can you go back to my slide and make sure I caught everything that I wanted to cover? This button. So we talked about entering income and expenses. There's one tab for each of those. We talked about the drop-down menus. We're going to compare it to tax forms here in a minute. Tracking of properties on the drop-down sheet. That's how you simply add new addresses or new LLCs. We talked about putting in what year it is. In the version that's on James's website, you won't have to put in how many days are in February, but you probably can still laugh at that when you see it. We walked through the property report sheet. We talked about using the monthly view to catch mistakes, and we talked about total investment column. That was all the extra information I put on that drop-down sheet that I said this is all optional if you want to put it. It's super nice if you just kind of update that over time. Hey, this year my property is now worth $300,000. The next year my property is worth $325,000, right? Then if a bank says, hey, can you send me your real estate owned schedule? You go, yeah, I sure can. It's right here. You've already got it done, right? And it kind of gives you the impetus to keep up on that. So here is what Form 8825 and Schedule E look like. Basically, you can see, right? We've got rent, and then we've got all the stuff for expenses that we have in those drop-downs. Same order as it is on the spreadsheet. So you should be able to theoretically hand that to your accountant, and minus CapEx and settlement statement issues and depreciation, they should be able to simply plug those numbers in. Should be very straightforward. There was a time when I filed my own taxes, and it was very easy to just plug them in. Does that make sense? Have all of you guys seen one of these two forms as you file your taxes? If you haven't, you will shortly see them at the end of the year. So that's what that looks like. So it's tax time. What do? Basically, make sure your spreadsheet's up to date, right? If you're Royce, you're like, here's my QuickBooks file, right? And that's super easy. And if that's what you chose to do, that's great. But if you're using this method, make sure your spreadsheet's up to date. Use the spreadsheet and compile the information for each property, which was that snapshot that I showed you for each individual property. I just put it in a spreadsheet, and then I send all of them at once in one spreadsheet to my CPA. So not very difficult once you've got that format, and you can pull it right out of the spreadsheet you already have. And then anything else that had expenses or income, you need to submit that as well. So if your master LLC had a filing fee or had other things, make sure you submit those expenses as well. Mortgage. What's wrong with mortgage in this picture? Right? This is not mortgage interest. Not everything you pay in your mortgage payment is mortgage interest unless you have an interest-only loan. So at the end of the year, you need to go and look to see how much mortgage interest you actually paid and update this number to be that. Right? Your CPA will also do this for you if you send her your end of year mortgage statement, but that is the one thing where tracking it monthly in this spreadsheet, you can totally do it. It's a large pain in the butt. So I would recommend saving that for the end of year. Your bank will send you a 1099 and tell you, this is how much you spent in mortgage interest. Fantastic. I just typed that number in. I'm done. Right? Very easy. Capital improvements, or CapEx. You'll notice I have a little red flag here. My CPA knows, oh, he's got a CapEx number in here. When she opens and mouses over this, it will basically say, Unit 1, flooring, $2,000. Unit 3, refrigerator, $800, right? And then I will have a conversation about, do we want to actually depreciate these things? Or are we just going to take them as an expense based on my situation for the year, how much the property is worth, etc. So consult your CPA on that, but definitely track your CapEx stuff. Note it throughout the year. It'll make your life a lot easier. Mileage. So in 2018, the mileage is 54.5 cents per mile. You'll notice if you saw on one of them, it said mileage to James and mileage to Brian in the expense sheet on the spreadsheet. If you are in a partnership, you want to pay that stuff out before the end of the year. That way it just shows up in his expense. I pay James $300 because that's how much he drove for that property. I pay me $250 because that's how much I drove. And now it shows up as an expense. If you don't pay it out, it just gets a little more complicated. But pay that out prior to the end of the year. If not, if it's just you, you're welcome to list his mileage, and your CPA will figure out 54.5 times the number of miles you drove is this amount, and they will use that as a deduction. And then give this to your CPA. And hopefully they can handle it from there, and you review your tax return, and it should be good. So for my CPAs in the room, all the CPA hands just went up. They're like, that guy's on drugs.
I would highly recommend last couple years using your spreadsheet. Exactly. I just take the itemized sheet and, point out any CapEx expenses. Easy, easy, easy peasy. My question to you is, how do you keep track of your mileage?
So with a property manager, I don't anymore. I do have mileage for my properties, but it's so small that I just don't track it now. When I did keep track of it, I would basically, I had a file in OneNote that basically was, hey, I drove from here to here, and I would mark how many miles it was. And it's a pain, right? It's a pain to keep track of. There are apps on your phone that you can simply, hey, this one I attribute to this property, this one I attribute to this property. Do you know what it's called?
Yeah, so there's a couple. Mileage, yeah, Mile IQ is a really good one. And there's another one, Everland, so it's really good. And they'll just start, you can set them up, and they're just, like I have one that runs all the time. And when I have a trip, I just say, oh, yep, this time I classify it as non-personal, and it goes and does its thing.
For me, after I switched to the property manager, it ended up being such a small number that I was just like, I don't care. So it wasn't worth the hassle to keep track of. Kim had a question too.
I just didn't know if part of your spreadsheet also just keeps track of the capital expenses and all whatever.
So in the spreadsheet, there is a column for the dropdown that is capital expense. So it will pull it out as a separate category. And I would highly recommend that inside the description, you type Unit 1 flooring, and that way it's really easy for you to go back at the end and go, yeah, CapEx, this is what it was for, this is the unit, and you can pull that stuff out very quickly. Yep, it'll do the, did you leave it open, James? So basically, it's going to total everything up, and you can see in capital improvements, totals were $79.57. Apparently, that was all in 1 month in July. And then you can go and figure out in the expense dropdown, you can literally just search under the description. So you could search for capital expense, if I could spell. And so there's capital improvements, right? And so it starts 1, 2, 3, 4 Main Street, capital improvements. It was yard and fence. It was $5,000. Search the next one, yard and fence, $5,000 for that unit, and you can easily pull out exactly what they were. Question in the back.
I know the answer to this, but I just would like you to tell everybody else. Can you go into detail about the difference between repairs and capital improvements? Yeah, for accounting-wise, or
sure,
for documentation.
Yeah, and you can correct anything I say that's not correct. So, like, a capital improvement is typically something that's done to improve the property, and in many cases, replacing flooring. If you have carpet and you replace it with carpet, you can tell me whether you think that's a capital improvement or not. My CPA will say, no, you needed to make the flooring better. So if you went from carpet to tile, right, or even hardwood, that might be an improvement. But if you just pull up vinyl in the kitchen and put new vinyl down, it's technically not a capital improvement. Now, the IRS has a lot of really gray areas. So you can choose to be super aggressive and maybe get audited and then defend your position, or you can choose to be safer and still maybe get audited and have to defend your position. But in general, if you're fixing a leaky faucet, is that a capital expense? No. If you're putting a new roof on, is that a capital expense?
That's kind of great.
Yeah. So in most cases, the answer is probably yes for a new roof, right? But consult your CPA on this. And in most cases, and again, I'm sure you know the Safe Harbor Act much better than I do, but if it's not above a certain threshold, you can take everything as a straight expense for the year, right? Which is, in many cases, preferable for landlords because you get to basically write that off now against income you have today. So talk to your CPA. Do you want to comment on Safe Harbor stuff at all? No? Yeah, so I'm trying to keep it simple. Safe harbor basically was they're setting some criteria for if your property is worth X amount, you can expense stuff up to a certain percentage. If it's over that, then you have to take it as a capital expense. You need to declare ahead of time what you intend to do with the property. Your CPA can handle this for you. It's well beyond, I mean, I know it enough for my own stuff, but it slightly changes year to year, even for my stuff. So talk to your CPA about it. In most cases, unless you're putting lots of capital improvements in, there's a high chance, like in this particular case, this $2,200, I think these were real numbers from actual properties. I just renamed the properties. In that particular case, I ended up, that was flooring for unit. That was an upgrade, and so half of it got depreciated, and half of it I took as an expense because I took the accelerated expense. I didn't want to have the whole thing depreciated, and that might be mandatory. Is that mandatory for me to do?
Yeah.
Yeah. So basically 1,101 of this shows up immediately as an expense, and the other 1,101 shows up as depreciation, which you can see right here. So this is the depreciation form, right? And this flooring depreciated at 5 years, where single-family home, what do we depreciate a single-family home at? 27.5. What do we depreciate commercial at? Right. So you can kind of see that right there. The answers were on the board. But there are other depreciation zones besides 5 years and 27.5 and 39. So let your CPA determine what's correct. You don't need to tell them. They will figure it out. Any questions on that? So I talked about 50% was taken immediately as an expense, which is awesome because I immediately get to deduct that against income I got this year. And the rest was depreciated over 5 years. Any questions? Perfect. Documents to give your CPA, obviously your personal return, but any settlement or HUD-1 statements you have from that year, right? End of year mortgage statements, all the 1098s, 1099s you receive. Bank account statement for the LLC. So your CPA may or may not need this, but they may, if they're actually filing, what is it called? What is the statement called? Where the value is over $1 million and you have to file the... Good. It's not just me that can't remember it. But basically, they need to have a record of you started with $1,000, you ended with $5,000, and what is that called? The balance sheet, right? They need a balance. Like this is a really, I can't think of it. They need a balance sheet for your LLC at that point. So in that case, they're going to need to know what did your bank account start at? What did your bank account end at? And they're going to match every single transaction from the property manager and any other transactions you give them up to make sure it matches to the penny. It's no fun when it doesn't match. Probably going to need your LLC operating agreement if they don't already have it, right? They're going to need all partners' names and social security numbers. If you're super sensitive about your social security number, which you probably should be, have your partners call the CPA directly and give them their social security number. That way you don't have to handle it for them. They're going to need the EIN. Does everyone know what an EIN is? No. So this is basically your social security number for your LLC, right? You register with the government and they say, here's your EIN, right? And that is what your LLC uses as its identification number.
If you don't, you should request an EIN, but if you don't, for like a single member LLC, you would just use your social security number.
Yep. Full year of the property management statement if you have a property manager. Otherwise, just the info from your spreadsheet that we talked about submitting. And income expense categories that include the CapEx. So that is what I submit to the CPA. Obviously, this doesn't include all the personal return stuff, but that is just for your property. Any questions on that? Perfect. Getting started with my spreadsheet, right? You don't have to enter days in February anymore, so go enter the year on the property report tab and go to drop down, enter the names of your properties, right? I'll go fix the mistake on the insurance thing. If it's actually a mistake, I'll check it tonight. Start entering your income and expense data. You'd be surprised if you only have a couple properties. It's very simple to go back and just go, you know what? What's happened so far this year? It's June. An hour later, it's all in there. And now you've got a month-by-month view of your property and what it's doing, which is awesome. And that's really it. The property tab will now show all of your data. And that is all I have. Questions? Comments? James is amazed that it's not 8:30.
So how does this compare with the bigger pocket?
I don't know. Ask Nick. How does it compare? What does the bigger pocket spreadsheet have?
It's just structured differently. A lot of the same tabs. I wish it gave final reports like that. Is nice. And the IRS listed out. It's essentially like, how do you say it? Ear tagging that expense. I think that's a lot better on here than on the bigger pockets one. But it's free on their website if you go.
Yeah, so I was,
mess around with it.
I've not seen that spreadsheet. I've seen their deal analysis spreadsheet. And you had to be a member to get their like advanced one. And I actually sent them some feedback to one of the two guys that started it, just because I was like, you're missing some stuff. And they've simplified some stuff in their deal analysis, so I don't know what they've done here. But whatever works for you is what you should use, right? I could honestly care less if you like my spreadsheet or you use it. It's there for you if you want to use it. I can tell you that it's worked very well for me, for my properties and my CPA. So if it works for you, fantastic. If it doesn't, or you're like, you know, I wish it did this, let me know. And maybe when I have a few free minutes, I will update it and make those changes. Any other thoughts, questions about this or anything else? We'll handle anything because got a little bit of extra time. All right, thanks. Wow. Man, you know, I get through asset protection in like 2 hours flat now, and I get nothing for that. Kim.
I thought this was supposed to be how to use QuickBooks, so basically you're saying just don't.
So again, it's up to you, right? If you like QuickBooks and you already know QuickBooks, yeah, so I don't like QuickBooks either. And QuickBooks is an amazing piece of software. I just don't want to use it, right? And for me, so when I started out, it was like, hey, I've got one property, now two properties, now three. This was a much easier solution for me than QuickBooks. And I can build Excel spreadsheets very quickly and make it exactly what I want, right? And so I was like, I have QuickBooks, I own it, right? I started using it and I was like, this is overkill for what I want. Now, my CPA would probably much prefer that I use QuickBooks, right? And she honestly probably has a point to some degree, right? Especially now. But for me, this works, and I'm willing to pay a little bit more for my return to get done and not have to do the bookkeeping work in QuickBooks throughout the year. So
you don't worry about all the like the stuff in the HUD and all that?
the CPA will handle all the stuff in the settlement statement because if you're, like Roy said earlier, if you're trying to do your own settlement statement into QuickBooks, good luck, honestly. I mean, you're going to get it 90% right, but there are times where two different CPAs will do it differently, and I'm like, which one's right? And they're both right. And I'm like, well, that's dumb, right? Like, if it's A, it should go in the A box. If it's B, it should go in the B box, but it's not that simple. And so unless you understand that, hey, as a part of the purchase of this property, these other things are actually now included in the value of the property, you're never going to get that right, right? There's small things that CPAs are trained and they have education based around how to do that well, that it's just not worth your time to learn. It'd be like getting a CPA degree to be able to enter it in QuickBooks. It's much quicker to pay somebody, you know, $100 to enter your settlement statement and basically set up your QuickBooks so that you can enter the recurring data and then pass that off. But I would not recommend doing settlement statements or purchase or sale side settlement statements at all, or depreciation for that matter. Because if you get it wrong, it's wrong, right? And depreciation, it's year after year after year. And so I'd hate to go back and refile. Oh, I did it wrong, and I got to go refile 4 years of taxes now. Denise?
The one I struggle with is the initial purchase, getting the basis of the property at the very start. That's trying to figure out that number.
Yeah, that's why I don't do it.
Okay.
I mean, you work at a CPA firm. Like, it's hard, right? I mean, and honestly, for all practical purposes, like knowing the actual basis isn't, as long as you're close and you're doing your analysis, it's fine, right? They're going to get it down to the penny. Is, you know, $100 here, $1,000 there in the purchase of a $350,000 house for basis really going to change your deal analysis? No, right? Sure. And that's why you have a CPA who's watching that stuff, right? So, yeah.
So
Do you have another question? Comment? He's smiling. Get him the mic. He's got a comment. I saw. He's like, I got a comment on that. We got CPAs in the room. You stop looking at me and look at them.
Well, going back to what you were talking about with basis, I had a client last month. She had inherited several properties in California when her father died. She inherited them in 2004, turned them into rental properties in 2011. She sold one off in 2016. She sold another one off in 2017. She gave me her return to do for 2017. She asked me to figure out what her basis was. So I had to go back and look through all these different reports because she didn't have anything on this property. Her father had built the house. Oh. Yeah, so that is really, really bad. It was so because she was thinking that her basis was $399,000, and I went and looked at it, and she sold it for $260,000. I was like, "There's no way that your basis is $390,000." So it was really tough, and a lot of people. When I went back and looked at a lot of her tax returns, she had an accountant do her taxes right one year, and then she did it herself, and she kept changing what her depreciation basis was, which was very bad.
Yep.
So I had to go in and capitalize some improvements that I don't know for sure if they were legit, but that's what I did to make myself feel better. Yeah, but well, I have proof to back it up. So I mean, I have documentation. I don't know if it was accurate, but I do have the documentation I could follow through.
Right, and if they would have had, like, and I don't know the situation, and you don't have to comment further on it, but if they would have had a good estate plan, right, her basis should have been zero, right, when he died and she took it over. So, it should have moved it up to the current value. Yes. Right, yes. Not zero. Yes, not zero. Yes, the other way. Yes. Yes. I was basically thinking in my head she wouldn't owe taxes. There would be zero tax benefit as of the day it was transferred. But
just some quick professional advice. Even though I work in accounting each and every day, I still have somebody else do my tax-in stuff. I have a tax accountant because, you know, I do the worksheet, Brian's worksheet, I use it. But if you're not detailed, if you don't want to be bothered with that, it's worth $100 a month or whatever to have somebody else do it for you. Because what the nightmare is at the end of the year when you have to do your taxes and you're going through that shoebox and you can't read the receipt and things like that. So just find somebody you trust, and you know, and I think it's really well worth it. So.
Yep. And make sure that you review. This is hard, right? Someone else is doing your taxes. You still have to review your taxes. You need to ask questions about any numbers you don't understand. Right? I have a really long tax return, but every year my CPA gets a list like, I went through it, where'd you get this number, what's this for, what is this, what is that? So I understand that she did what I thought she did, because if she files it and I approved it, it's my problem, right? They're not gonna audit her, they're gonna audit me. And I've been audited by the IRS in a letter audit, which is, I will tell you that if you have data and files to back it up, you will be much more likely to win very easily with no issue. If you don't have it, I'm not going to say, but I essentially got a letter, fun story because we have time. I'm going to try and make it go to 8:30 just for James. So for those of you that don't know, I used to play professional poker in Vegas. I lived there for 3 years, and I played a lot of poker online. And so I would play 24 tables at the same time on 2 large monitors, which generates about 1,000 plus hands an hour of poker being played. And so all of those digitally are recorded and saved, right? And so I had all of those files. I filed my taxes for the year, and the government sent me a letter saying, you owe us $30,000. And I was like, no, because in normal, I mean, you should always say no. So a lot of people will get this letter, and it's essentially, you need to write us a check for $30,000, and there are high wealth clients who will just write a check and put it in the mail, right? Do not do this, right? Do not mail the check. How much harder do you think it's going to be to get that back than it is to not send it? So in professional gambling, if you are classified as a professional gambler, which I won't explain what it means, you can basically say, I won $1,000, I lost $500, my net's $500. If you're not, it doesn't work that way. You actually, it's really stupid. You add up all of your winnings and all of your losses. I don't even remember how this works. And then, like for me, because my income was high enough, not all of my losses would actually be able to count. And so it turns out that even if I won $1,000 and lost $1,000, I would still end up paying taxes as a non-professional gambler. So they basically looked at that and went, well, that's you. And I went, nope. And so the reply was, here is a day-by-day, session-by-session list of winnings and losses from online poker, along with the live sessions that I played at the tables. And I also have a thumb drive I could send you with 650 megs of actual table data that show every hand played. We'd be happy to send that to you. The CPA drafted it up, sent it over, and 2 weeks later they're like, you owe 0, right? So save your data, right? If you have the data to back up whatever it is you're trying to do, you are much more likely to be in a good position. The IRS is very gray on lots of stuff. You can try to be aggressive. You can try to be conservative. I kind of play it in the middle. I'm not looking to get audited, but if I get audited, I'm going to defend. So just consider what you want to do.
So I had a question. You had made a comment before about checking all the numbers from the tax returns for CPAs. How often do you find the CPA making a, maybe not an error, but just doing something there or missing something you had told them or something like that? Is it worth your time to go and do that?
Yeah, it's your fiscal responsibility to go do it, number one. 2, you're going to find errors, and they're going to find errors when they originally do your return. They're going to be like, hey, I don't have any property tax information for this property for the year. And I'm thinking, no, I supplied that. And then I go look, and it's like, oh, it's actually on a property where I pay it personally out of that account. It's not paid by the mortgage company. And I'm like, yeah, it's that much. So mistakes get caught both ways. And mistakes also get caught by reviews at the CPA firm, right? So one CPA will do the return and another CPA will review it. And I know last year there was I think in both years there was stuff caught where it was important enough that it mattered.
So for your tax return, as an example, you'll have a CPA prepare it. At the CPA firm, another CPA will review it.
Yep.
So it's a second set of eyes, and then you're a third set of eyes.
I review it before that happens.
Okay, and so in a lot of cases, you're having at least 3 reviews, if not 4 reviews going on.
Yep.
Whereas somebody may do their own tax return in TurboTax or whatever it is, they may only barely review it once.
Yeah, please do not. TurboTax is great for a lot of things. Don't use it for real estate. It's not your friend. So.
Yeah, I think I'll just state, I think I've caught errors every year, right? Where corrections have had to be made.
Yep, and some of it's just you supply information, and it's like they look at it and go, oh yeah, that's what that was, and you look and go, no, that's not what that was. I meant that to be here, and it's just a communication error, right? Somebody sees it as one thing, and you perceive it as another.
And it becomes, more and more complicated as you add in partners and having to interpret operating agreements correctly. So you really are the subject matter expert when it comes to that, and it is your responsibility to understand it, review it, and make sure that that looks correct.
Yeah, especially in the case of partner reviews. I know Royce has been through this. I think it was right after when I was like, watch out for this. He's like, yeah, I just got that email today. But like in partner things, depending on how you set up your partnerships, if you have a partner who is just signing on the loan and you're putting all the money in, and you're like, well, I'm going to give you 20% for signing on the loan, and I'm going to take 80% for putting all the money in, unless your operating agreement is written correctly, what happens is if I put $100,000 in and I'm 80% and he's 20%, if you just have a normal operating agreement you got from LLC Zoom or whatever the heck that company is, or wherever, right? You buy it at Office Depot or whatever, it will essentially give him $20,000 of tax liability for the year, right? Which he doesn't want, and I certainly didn't intend, but they will look at it as, well, you put $100,000 in and he got 20%, so you essentially gifted him $20,000. So if you're not paying attention to your tax returns, stuff like that happens, right? It's harder to undo than it is to correct before it gets done.
So I'll make a couple comments about QuickBooks really quick.
QuickBooks comments?
QuickBooks, yeah.
Time's up.
One of the things about Brian's spreadsheet that's great is that you can go and you can take it and use it today. You don't need to understand the debits and credit components. I will say I had experience taking at least 3 years of accounting classes between high school and college classes. So it made it really easy for me to use that system. But I think it would definitely be something where if you were trying to ramp up, you're probably going to take at the minimum some like Skillshare class or something like that to even get the fundamentals down. So there is a learning curve to it, and then there's a cost component to it. I buy the desktop version, so there's a desktop and an online version. I buy the desktop because I can have an unlimited number of classes, so each property can be its own class and run. If you're on the online version, you're paying $10 a month per class, which is then, you know, if you have 3 properties, you're paying $30 a month, right? And so at that point, if you really are wanting to use QuickBooks and the online, you really should weigh the options of just using a bookkeeper, letting them pay for the software, and that's it. You're not doing it, you're just paying for the bookkeeping services. And I think for myself, for 3 LLCs, I'm paying like $75 a quarter to have bookkeeping done. So it's very cost effective. And I think that it actually makes a lot of sense. So I use a bookkeeper that also works directly with my accountant. And at the end of the year, since I made that switch over, my tax bill at the end of the year, prep fees are significantly lower because it's prepared the way that she wants it throughout the year.
Yep. And as your business grows, I will just say don't skimp on who you hire as a CPA. Like, find a CPA that you can work with, 1, and 2, that knows their stuff. Having someone file your return that's not done well is just not going to be any fun for you. So find somebody that you're able to work with, who you can communicate with, because you're going to spend a lot of time as your business grows to be bigger and bigger. You're also going to spend a lot of money. So
and you'll find differences. There'll be 2 different, I mean, your accountant can be great, but you may choose that you want to be more aggressive, and your accountant may say that that's just not the way they operate. They're happy to refer you to somebody who's willing to be more aggressive, which may work with you. And it's all this risk component. This is kind of that gray area Brian mentioned earlier, but you know, make sure you're working with an accountant that aligns with what your goals are.
yeah, go in, sit down, meet with them, understand how they do returns. Do they just do a return? Do they have somebody underneath them do the return? And who reviews it, right? So I have a CPA, I have 2 CPAs, one that does a self-directed 401k return for me, and the price for that person basically is probably about 1/4 of what the price for the same level of return that the other person does. This return though, I have to like super handhold, right? It's like watching the college graduate do the return. So you get what you pay for in most of the instances. But they're also, I mean, she also does a really good job for what she charges me, and I can't complain. So, but it's more work. It's just like an attorney, right? You can find an attorney that's going to charge you $70 an hour, and you can find one that's going to charge you $300 an hour, right? They may both have the same exact intellect and capabilities, but you need to figure that out before you hire them. Anybody else have any questions, comments, other things they want to talk about? Perfect. Well, thank you all for coming, and we will see you next week for deal analysis, multifamily 301. I was like, whatever I'm teaching next week.